What's going on, everyone? Welcome back to Sin City Crypto. My name is David. I'm joined as always with Robin, and today we are discussing DCG, Digital Currency Group, Grayscale. What does it mean? Are they in hot water? We have some facts to share with you guys. Before we get into what's going on with DCG, what DCG is, it is Digital Currency Group. It was founded by Barry Silbert, who was one of the first investors in Bitcoin. DCG is the father company of CoinDesk, Genesis Global Trading, Grayscale Bitcoin Trust, Foundry, and Luno. They also have a massive portfolio of companies they've invested in, and there's rumors that they might be in some hot water. They are doing a fundraising of over $1 billion because apparently they owe that money to Genesis Global Trading, which we know halted withdrawals and transfers and loans in the crypto space last week, and we've seen the ripple effects with Gemini Earn halting their Earn withdrawals. And so we're going to dig into that. So let's not waste any time. First thing we're going to start off with is what kind of coins does DCG hold? And so here's their list from their website, and you can go find this out for yourself. The digital assets they hold include Bitcoin, Ethereum, Ethereum Classic, Decentraland, Filecoin, Horizon, LivePeer, and Zcash, but it does not stop there. They have their hands in tons of companies. As you can see here, these are all aggregated based off of what sector they come from. You can see on an international level. So it's not just here in the US. They have their hands in companies that you might have heard of, like Chainalysis, like Etherscan, Elliptic, Merkle Science. I mean, of course, FTX, which is what started the Genesis Global Trading here, their debacle. But you can see the mass amount of companies that they have their hands in, they have money invested into. Will they have to get rid of some of these assets to come up with the $1 billion? Because apparently no one is biting on their funding round that they're trying to raise the $1 billion from. Robin, do you think it's practical to say that if they don't get the $1 billion raised, that they will have to offload either some of their currencies they hold or some of the companies that they have shares in or possibly coins from?
I think their treasury is so deep from early investment into Bitcoin that they'll be fine. Digital Currency Group is one of the largest companies, if not the largest company in the crypto space. So vulnerability for, say, going under or liquidations of companies, I think is unlikely. Genesis is underwater, one of their companies that facilitates liquidity for exchanges. And they've also lent out and borrowed money to a lot of other institutions. And we know that there is potential for a contagion to spread into Digital Currency Group. They had a lot of exposure to FTX. I think that it is probable that Genesis will go under. I think that's kind of the direction that we're going. If you were at least to look at all the other companies that have halted withdrawals and trading, that is the typical blueprint. So I would expect Genesis to follow suit. But what is the implications for Digital Currency Group if Genesis, one of their largest companies, one of the biggest forms of profit and revenue for the company, if that arm were to go under, what are the implications of it? I don't know. And I'm actually kind of scared to even think about it, I'll be honest with you. And if Genesis goes under, not good. If Digital Currency Group goes under, holy dog crap. Now, that's all speculation. But as the contagion spreads, people you wouldn't expect to go under, like FTX as an example, are the latest casualties. Could DCG be the next casualty? It's possible. So tie the boat up because the storm is coming.
So here's some background and some insight as to what's been happening. So the CEO of Genesis resigned abruptly on August 17th of this year. And so we've seen kind of this trend where high-ranking officials within companies will just randomly resign, and then the whole house of cards comes crashing down. The latest example is Brett Harrison from FTX.us. Also, on around November 12th of this year, DCG scrubbed from their website the Who We Are page. They got rid of employee names, photos, biographies from their own website. Read into that as you want. A few days later, on the 16th of November, the subsidiary Genesis suddenly halted all the withdrawals and loan applications, and then a day later, the Wall Street Journal reported that it had obtained confidential documents stating that Genesis was undergoing an ongoing run on deposits, and they needed a $1 billion emergency loan by the following Monday, which is today. Now, let's take a look at what DCG was doing and where we are today. So this all started on March 10th of last year, where this is from Business Wire. They purchased $250 million worth of their GBTC shares. Then on May 3rd, they purchased another $557 million of their Bitcoin trust, their GBTC shares. Then on June 21st of last year, they authorized another $50 million, but this time of their Ethereum Classic Trust shares, followed by October 20th, another $1 billion worth of shares of the GBTC Trust. You also have, so that was in October. Then in November comes around, and they raised money, a credit facility up to $600 million. This is a direct quote from founder and CEO Barry Silbert of DCG. This financing strengthens our ability to respond dynamically to opportunities in the market. Now, didn't stop there. 4 months after they raised that $600 million, they dropped another $250 million in repurchasing their shares. This time, the way the breakdown was, $30 million went to the Litecoin Trust, $10 million to the Horizon, $10 million to Zcash, and a total of $200 million spread across Bitcoin Cash, their Bitcoin Trust, their large cap fund, ETC, Ethereum, and Stellar Lumens. DCG plans to use cash on hand to fund the purchases and will make the purchases on the open market. So we know they were trying to prop up the price of their GBTC share that's traded on the open market. Now, let's look at what was the discount or premium of GBTC when they started to buy. So we can look here. This is from whitecharts.com. You can look at this info yourself. But when they started buying is when we started going into negative. When we went from a premium net asset value to a discount net asset value. And we are currently sitting at over 45, close to 50% discount on GBTC versus the underlying price of Bitcoin. What's your thoughts on this, Rob? Now, I do want to mention that buybacks of shares and stock is not uncommon. It happens all the time with the largest companies. But do you think DCG made the incorrect decision to either buy at the time they did or deploy that much capital of their working capital into their own shares?
Well, a couple things. One, they've been dollar cost averaging for the long haul. And so, yes, they did dollar cost average at the top, and you're talking about billions of dollars funneling into Bitcoin. Now, is that money that they need to draw on right now during the depths of the bear market? That is what's concerning, because if you need to liquidate your Bitcoin holdings, you obviously know you're selling at a loss. But if you were to expand your time horizon, DCG has been buying Bitcoin since 2015, and so their price entry is probably under $1,000, honestly, for a lot of their early buys. And so they also have early investment in all those companies that you listed, Decentraland. You also have Coinbase, lots of institutions. Now, obviously, they invested in FTX. I would assume they're probably way down. They're probably in the red. They're probably hemorrhaging cash, and they're probably trying to stay afloat in any means necessary. And that's why I go back to this Genesis thing, because there's only so much more money they can pump into. There's only so much more money they have on hand that they can send that way. And so for that reason, I think Genesis is toast. And I do think that there is potential vulnerability for Digital Currency Group to have some kind of bankruptcy or need some cash in the near future,
or at least a restructuring.
Yeah, or restructuring. That's all on the table, and it's all possible. And as far as them buying at the top, I think that's just their dollar cost average strategy. You also got to think, when they bought at the top, they were also probably liquidating some of their positions in other assets. So how much percentage gains were they up on, say, Decentraland, for example? Obviously they probably got in at pennies, and they've probably 100,000x their investment there, and then they move those profits into Bitcoin.
They've
And-
also had multiple funding rounds to where they raise money and use that money to buy back the shares, in which we saw,
Yeah.
that happened last November. So we actually, we've been covering a lot of topics, and if you haven't done so already, make sure you subscribe to Sin City Crypto at Sin City Crypto. We've been covering the FTX debacle. You'll find it under the playlist. It's we've aggregated all the SBF and FTX drama here for you guys to make it easier to access. And also, as DCG and Genesis, as this thing continues to unfold with Grayscale, we will continue to keep you in the know with what's going on. Now, DCG going under would be a massive blow. A lot of people are saying, well, would they have to liquidate all the Bitcoin in the Bitcoin trust? The answer is probably not. What you got to understand is the way the trust works. There is a sponsor and a third party that oversees the trust, and they have a fiduciary responsibility, which means they have to act in the best interest of the shareholders when it comes to financials. That is by law. It is written in law. And so although we might see some of their shares being sold off to raise money, but even then, they hold 28 million shares of GBTC. And at current value, $8, you're looking at a little over $220 million. Way off from the $1 billion they would need. So that wouldn't even make sense. On top of that, with a majority of their buying coming in at close to the top, over $40, it would make zero financial sense for them to take a 85% hit in their portfolio to try to raise capital to save a falling company. That'll do it for the video today. Thank you guys so much for watching. Make sure to tune in Monday through Friday at 10:30 a.m. Pacific Standard Time for our daily live show. Until the next video, friends, we'll see you then. Peace.